This is Matthew Kratter from Trade University, and today I want to talk about another crypto exchange, in fact a really big one that a lot of people are saying is close to collapse. You'll find out what I think about that if you watch this video all the way to the end. So we first have to talk about this guy. His name, if you don't already know, is Sam Bankman-Fried, often known as SBF. People who don't like him call him scam, bankster, fraud, but I think that's really mean, so please don't call him that. His empire is these two main companies, FTX, which is a crypto exchange, and Alameda Research, which is a trading firm. And as we're going to see, there's a very incestuous relationship between both of these corporate entities. This article came out in Coinbase a couple days ago, and the data in here is what we're going to be talking about. What basically happened is the balance sheet from Alameda Research was leaked, and it turns out that their main asset is a token that was printed up by FTX. And so another way of thinking about this is this is what was done. You just print up some funny money at one company, and then you use it as an asset at another company that you also control. So for example, if I were to do this, I would maybe print up Trade University tokens, use them as a main asset on the balance sheet at my new tropical island acquisition company. And this might actually work, especially if you're someone like SBF and you control billions of dollars. This works, of course, until everyone notices. And then at that point, there's the very real risk that both companies collapse. And that's what this video is going to be about today. So Alameda Research's balance sheet, at least a version of it, we don't know if it's the complete balance sheet, was leaked. And this is a snapshot of balance sheet that's a snapshot of assets and liabilities for Alameda Research, which again is SBF's trading firm as of June 30th of this year. This balance sheet showed $14.6 billion in assets, of which $5.82 billion was FTT, which is the exchange token for FTX. And if you own this, I guess it gives you discounts on commissions when you trade with FTX or something really silly like that. But this is a very large percentage of the total assets of the firm. And again, this is the sister firm. This isn't the exchange. So you have one company that he controls owning so much of the token from the other company. Now, the other problem with this number, this 5.82 billion, is this is a bit of an accounting conundrum because that's actually more than the entire value or market cap of FTT on that date. This is very, very strange. I haven't seen anyone else point it out, but it looks to me at least that they were misstating the true value of this asset on their balance sheet. And that, if it's true, that is actually accounting fraud. If we go and take a look, so this snapshot of the FTT on their balance sheet was 5.82 billion as of June 30th. The total value of FTT on June 30th was 3.33 billion. So they're overstating, they're basically saying they own more FTT than the total market cap, which of course is not possible. You can't own more Facebook stock than the total market cap. So this looks like accounting fraud, quite possibly. And I'm not sure how they come up with this number. Maybe I'm missing something, the difference between unlocked and locked FTT. But it looks to me at least like there's something very fishy going on with their accounting. Now, the whole point of a balance sheet is to calculate the equity or the ownership that's in the company. And just like you would do this with your household, you take your assets and you subtract your liabilities, and that gives you shareholder value or equity. And if we do that for 14.6 billion in assets minus 8 billion in liabilities, again, this is based on the Coinbase article, which was that leaked balance sheet, it looks like Alameda has 6.6 billion in equity, of which 5.82 billion is these FTT tokens from the FTX exchange. Now, this is a big problem, not just because that 5.82 billion was larger than the entire market cap of FTT, but it's also a problem because this FTT token is pretty illiquid. That means that there's no good way to convert 5.82 billion to US dollars without tanking the market and thus devaluing that FTT, rendering it worth even less on the balance sheet. And this is also a problem because FTT is now worth less than it was on June 30th. Again, we're dealing with a snapshot of the balance sheet. We don't know how the other assets have moved around since then. We haven't seen the September balance sheet because these are my understanding, these are still privately held companies, and so they don't have to disclose this to the general public. But this story gets even more interesting What would happen if a competitor of FTX chose this moment in time to publicly announce that it's dumping all of its FTT tokens when there's already all this pressure on FTT? If someone did this, that would be a great way to try to force both FTX and Alameda to implode, because they have this relationship and they're both holding the FTT token, or one of the companies is holding the token issued by the other. But we don't have to imagine what would happen if someone tried to do this sort of attack, because this is exactly what 𝐂𝐍, who's the CEO of Binance, has decided to do. It's quite exquisite timing, but this was a tweet from November 6th. And this is 𝐂𝐍, the CEO of Binance, speaking as part of Binance's exit from FTX equity last year. So 𝐂𝐍 and Binance were investors in FTX. They received some liquidity and they were paid basically FTX. It looks like FTX bought their shares back from them in exchange for Binance dollars and the FTT token, roughly 2.1 billion. And so as a result of that, Binance is holding all of this FTT on their balance sheet, and it sounds like 𝐂𝐍 is not very happy about what he's reading in the popular press, and so he has decided to liquidate any remaining FTT on the books of Binance. So this is basically an attack. It looks a lot like an attack from a competitor on FTX in its moment of weakness. There's a whale alert. Someone noticed that about $584 million worth of the FTT token were moved to Binance to sell, and 𝐂𝐍 confirmed that this was part of it. So it looks like at least he's threatening to dump at least this amount. Take that, SBF, says 𝐂𝐍. What happens next is the CEO of Alameda Research, Caroline Ellison, tweets out that the balance sheet that was leaked is not the whole balance sheet. She said there's another subset. They have another $10 billion worth of assets that are not reflected there. Now, again, we have no way of knowing this. This could be a bluff or it could be true. She also came out and said to 𝐂𝐍 and Binance, if you want to dump your FTT, we will buy it all from you at $22, because they obviously, Alameda Research and FTX, don't want this drama. So they are offering to just take it all off of Binance's hands for $22 a share. Now, again, this sort of thing could be a bluff. Do they have the amount, that amount of cash on their balance sheet? Does Alameda have that much to buy back these tokens? And this is something we don't know. If they're in the process of going under, it makes sense to promise something like this, because it won't matter anyway, and they may not need to buy it because this may inspire enough confidence in the market. And again, this is what finance is all about. Ultimately, it's about trust. And this is why Satoshi's invention is so wonderful, because you don't have to deal with all these fallible human actors, and you can trust the code, unlike FTT and all of these silly tokens. If we take a look at FTT, it is trading above $22 a share, so it seems like they've stabilized that level. It looked like it was really testing $22 overnight. And then there was another tweet after that, basically saying that Binance was just doing risk management. And then he added something to the tweet that shows that he's actually quite bitter about what SBF, what Sam Bankman-Fried's been doing. We gave support before, this is 𝐂𝐍 speaking, but we won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against other industry players behind their back. So this really is a grudge. And I don't know exactly what sort of lobbying SBF has been doing, but this is the ugly game in the crypto space. You have the VCs lobbying, and you have all the large corporations lobbying, trying to get laws, industry laws that are favorable to them. And I think 𝐂𝐍 feels a little betrayed, because he invested in FTX and SBF, and now this is what it has come to. Now we got a response from SBF saying, okay, you want to play this game? Well, we can dump your Binance token if we wanted, the BNB. What happens if we dump that and do a market order and crash it? SBF ends by saying, I've always respected you, 𝐂𝐍, but it's time to end it. So what we get to witness on Twitter here, and this is why paying $8 a month is probably a pretty good deal, to be able to watch billionaires fight with each other in the public. And as a result of this threat from SBF, we can see that the BNB token, the Binance Exchange token, is down over 5%. In addition, where there are now reports from the block that there had been very large stablecoin outflows, and this may be people just removing their capital from FTX because they're worried about it going down. 451 million in stable coins in the last 7 days. So this is equivalent. This could be a run on the bank, or it might not be. It's very, very hard to tell from the outside. So what comes next here? If Alameda and the CEO is bluffing, we could see cascading liquidations, and this whole thing could go down. We could see contagion across all these different tokens and cryptocurrencies, as we saw with the Terra Luna implosion and the Celsius fiasco. If Alameda or FTX fail and go under, basically, and it becomes revealed that their liabilities are much, much higher than their assets, everything in the space, including Bitcoin, will fall. Now, Bitcoin seems to be holding okay, which gives me some confidence. Do I think that we are going to have an implosion like this? I actually don't this time around. I was correct about Celsius. I was correct about Terra Luna. This time, I don't think there's as much of a risk as the market is pricing in. SBF still is a darling in the space, and I think it's quite possible that he's a government asset himself. Again, that's just my personal opinion. You can make of it what you want. You can also do your research and decide for yourself. I think SBF and FTX can easily raise external money if they need to shore up their balance sheet. And to be very clear, I would not be sad at all to see these actors removed from the space. I think SBF really is a pretty scummy person. And so I would not be unhappy if this thing imploded. I just don't think it's going to happen because they can easily raise external money if they need to. Should you leave your Bitcoin on FTX or Binance or any other exchange while you wait to see how this plays out? Absolutely not. Not now. Never. Get your Bitcoin off the exchanges, withdraw it, hold it on a hardware wallet like the Trezor or Cold Card. If you're holding these silly tokens like BNB or FTT and you want to be at the mercy of these two feuding billionaires, that's your business. I only hold Bitcoin, and I sleep very well at night because I don't have to worry about drama like this. If Bitcoin falls a couple $1,000s because of this drama, so be it. I hope it actually does. I hope we get down to 15,000. I don't think that's going to happen, though. I think the bottom is in for Bitcoin. If you leave your Bitcoin on FTX or any other exchange, Coinbase, Binance, all of them, if you leave it on an app, there's a very real chance that your Bitcoin could end up frozen as an asset in bankruptcy court, just as happened with Celsius. And this could happen if you leave your coins on Coinbase or any of these companies, not your keys, not your Bitcoin. So if you want to learn more about different safe ways to store your Bitcoin rather than leaving it on the exchange, I will link to these two videos in the description notes below. The best ways to store small and medium amounts of Bitcoin, and then the best way to store large amounts of Bitcoin. So this is a little bit of crypto drama we've been seeing. I'll still be following it. I don't think it's hugely important. What the Fed is going to do in the coming months is really much more important for the price of Bitcoin, as is the fundamental adoption of Bitcoin that we continue to see progress. This is a reason that all of these coins are not real money and why they will continue, and they have been losing value against Bitcoin, which is really the only neutral global form of cryptocurrency. It's the only real crypto asset. It's not at the mercy of a corporation or a government. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.